Okay, so you've sent over the market reports for April 7th to 13th, 2025, all about precious metals. Let's get straight into it.
Sounds good.
Our deep dive today is really about pulling out the key movements and maybe more importantly, the forces behind those movements in the precious metals market last week.
Right. What was driving things?
Exactly. We want to give you the distilled version, what happened, why it matters, without getting lost in all the raw data.
Good plan.
We'll look at the overall market, the main drivers, and then get specific on gold, silver, platinum, and palladium. Kind of a shortcut to understanding a pretty busy week.
Absolutely. And busy is the right word. What really jumps out is the sheer level of activity. It wasn't quiet.
No, definitely not. We saw some significant price swings.
And quite varied performance across the different metals, didn't we?
Yeah, the reports really highlight that. Gold and silver surged, but platinum and palladium,
Yeah.
much more modest gains.
Right. Which tells you there were different factors at play.
It seems like the main story revolves around, well, a few big things interacting. Escalating U.S. China trade tensions, for one.
Definitely a key factor.
Then there was the U.S. dollar weakening quite a bit.
Uh-huh. Dropped below a key level.
And just sort of shifting investor sentiment around risk. Okay, let's dig into the trade situation first. What was it about these tariffs? Why such a big impact?
Well, I think it wasn't just the tariffs happened, it was the scale, the magnitude.
Okay.
The U.S. hiking tariffs on Chinese imports to 145%, that's a really significant jump.
Wow, yeah.
And China hitting back with 125% on U.S. goods, equally substantial. Compared to some past disputes, these numbers feel like a serious escalation.
So more than just posturing.
Exactly. It suggests maybe a hardening of positions, potentially longer-term disruption to trade, and that kind of thing. Well, it almost immediately dials up the uncertainty about global growth.
Which sends investors looking for.
Safe havens,
Yeah.
like gold. It wasn't just a minor skirmish. This felt more significant, creating real anxiety.
Right, the scale amplified the fear. Okay, makes sense. Now, the other big piece you mentioned, the weakening dollar. For listeners who don't track currencies daily, can you break down what that means, the dollar index falling?
Sure. So the U.S. dollar index, it basically measures the dollar against a basket of other major currencies, the euro, yen, pound sterling, etc.
Okay.
When the index falls, like it did drop below 100 for the first time since, July 2023, a 1.2% dip. It means the dollar is weaker against those other currencies.
Got it. And the link to metals.
Well, crucially, things like gold and silver are typically priced in U.S. dollars globally. So if the dollar weakens, they become cheaper for someone holding, say, euros or yen to buy.
Ah, okay. Their currency stretches further.
Precisely. It boosts their purchasing power for dollar-denominated assets. That increased affordability often lifts demand and therefore prices.
Okay, clear connection there. The reports also bring up the Federal Reserve, expectations about potential interest rate cuts. How does that prospect make precious metals more appealing?
Yeah, this gets into opportunity cost. When interest rates are high, you get a decent return holding things like bonds or even just cash in some accounts.
Right. They pay you interest.
Exactly. But gold, it
Right.
doesn't pay interest. It's non-yielding. So in a high-rate world, holding gold means you're giving up that potential interest income. That's the opportunity cost.
Okay.
But if people start expecting the Fed to cut rates, which the reports suggest was happening, despite some lingering inflation worries,
Then the return on those bonds and savings goes down.
right, which makes the zero yield from gold look relatively better. The opportunity cost of holding it shrinks, making it a more attractive place to park money as a store of value.
Makes sense. The relative appeal shifts. And then central banks were still buying gold too. That's mentioned as providing support.
Yes, that's been a consistent theme. Central banks kept adding to their gold reserves.
Is this just general nervousness or is there more to it? Specific reasons?
Well, it's partly about hedging against economic and geopolitical risks, sure, but it's also more strategic for some. We've seen a trend, particularly with central banks in emerging markets, actively boosting their gold holdings. It might be about diversifying away from, say, holding too many U.S. dollars,
Ah, reducing reliance on one currency.
potentially. Or maybe they see gold as just a more stable, long-term asset compared to potentially volatile foreign currencies, given their own domestic situations. It signals a longer-term strategic move for some major global players, not just a reaction to the week's news.
Interesting. So a deeper strategic layer there. Okay, with those big forces trade, dollar, Fed expectations, central bank buying. Let's look at the metals themselves. Gold obviously had a huge week. Hit that record high.
Yeah, $3,237.98 an ounce. That's a big number. and an 8.6% jump in 1 week.
Was there anything else driving that surge beyond the factors we've covered, or was it just the combination hitting hard?
I think it was mainly that combination, but hitting a new all-time high. That often creates its own momentum, you know?
So how do you mean?
Well, it can trigger technical buying, investors who wait for confirmation of a strong trend. Plus, psychologically, breaking such a major barrier reinforces that whole gold as a safe haven narrative. It can draw in more money.
Okay, so the record itself adds fuel. And silver, it also had a really impressive gain, right? Nearly 9%.
Right, closing at $31.21. And remember, silver has that dual personality.
Precious metal and industrial metal.
Exactly. So this week, it likely benefited from both angles. The safe haven demand definitely pulled it up alongside gold, but there's also ongoing industrial demand. Think about solar panels, electronics. That provides a sort of baseline support.
Yeah.
So the fear factor likely gave it the big push, but the industrial side might have helped sustain the rally. It gets a lift from both fear and function.
Fear and function. I like that. Okay, now platinum, much more modest gain, 2.2%, hitting $955.80. The report mentions industrial demand, especially automotive, even with supply concerns. That seems a bit counterintuitive.
It does, doesn't it? You hear supply deficit concerns and expect prices to maybe rise more.
Yeah.
But with platinum, while long-term supply from places like South Africa is a worry, the immediate price is heavily tied to current industrial demand.
And the auto sector is key there.
It is. But the auto industry has its own issues, supply chain stuff, and crucially, the big shift towards electric vehicles.
Which don't need platinum catalytic converters like gasoline cars do.
Exactly. So while the underlying supply might be tight, if immediate demand from the auto sector is just steady, or even facing headwinds from the EV transition, it can dampen the price reaction. The 2.2% gain suggests demand is there, but maybe not strong enough to fully capitalize on those supply worries right now.
Okay, so near-term demand realities are tempering the supply story. Got it. And palladium, the smallest gain, just 1.5% to $948.50. The EV transition is named as a headwind here, too. Is that the main story for its lagging performance?
I'd say so, absolutely. Palladium is even more reliant on catalytic converters for gasoline engines than platinum is.
So even more exposed to the EV shift.
Much more exposed. The transition won't happen overnight, of course. There's still plenty of demand from existing gasoline cars being made and driven.
Right.
But the long-term outlook for palladium demand is definitely clouded by EVs in a way that gold, or even silver with its wider uses, isn't. That 1.5% rise probably reflects some ongoing short-term industrial buying, but investors are looking ahead, and that EV narrative acts as a significant drag.
Really highlights how specific industry trends affect each metal differently, even when broader factors are pushing the whole sector.
Okay, so stepping back, the reports offer some key considerations for listeners. What are the main takeaways?
Well, I think first, given the volatility we saw, diversification makes sense. Spreading risk across different metals could be smart, since they clearly don't always move in lockstep.
Good point. What else?
Second, definitely keep an eye on those big economic indicators. U.S. economic data, what the Fed is saying and doing, and any major geopolitical shifts. Those are the things that really tend to move the needle in this market. Staying informed helps anticipate shifts, right? Monitoring those drivers we discussed. And specifically for gold, the outlook seems pretty positive. Analysts talking about continued strength.
Yeah, the projections mentioned are quite bullish, potentially targeting $3,500 an ounce.
Wow. And the reasoning behind that?
It mostly comes down to expectations of continued uncertainty. Things like stubborn inflation, maybe slower global growth, ongoing geopolitical friction. These tend to keep safe haven demand for gold elevated. Plus, if central banks keep buying, and if the Fed does eventually cut rates, as many expect, those would be additional supporting factors pushing prices higher.
Okay, so summing up our deep dive for this week, April 7th to 13th. Really strong showing for gold and silver, fueled by that safe haven rush from trade tensions and a weaker dollar, plus Fed rate cut hopes.
Definitely the headline story.
While platinum and palladium saw gains, but much more muted, kind of held back by their specific industrial demand outlooks, especially the EV transition impacting palladium.
A clear divergence based on those industrial factors.
It really underscores how interconnected everything is: global trade, currency values, monetary policy, and how directly it all flows into the precious metals market.
Precisely. These weren't random movements. They were direct responses to that confluence of major global developments we talked about, impacting both supply and demand dynamics.
So here's a final thought then. Given that outlook for potentially continued strength in gold driven by these persistent uncertainties, but also these really different long-term industrial stories for metals like palladium, what could be some unexpected knock-on effects beyond just investment returns?
That's interesting.
Could we see maybe accelerated research into alternatives for industrial metals if prices stay high or supply looks uncertain? Or could the concentration of gold reserves influence geopolitical leverage in ways we haven't quite seen yet?
That's definitely food for thought. The broader economic and even technological ripples could be quite significant down the line, something to consider well beyond just the market prices themselves.